Happy holidays from McKenzieLending.com. I'm Larissa McKenzie. I'm a loan officer, and today's video is going to be about renting is not the same as owning. So let's dispel some myths. The first myth is renting is the same as buying a house. There's no difference. There is a difference. First of all, if you are a renter, then you probably think that way. Me, I've had my real estate license for about 20 years, and I just recently got my mortgage loan officer license, and let me tell you why. I would say about 8 months ago, I was calling the Georgia Finance Banking Department, and I told them that I want to open my own bank. And they told me, I was asking them what I needed to do. And they were, I was explaining to them that what I wanted to do, and they told me it doesn't work that way. So I want to be a mortgage lender. I want to be a lender, someone who loans money to families and individuals and businesses. And you're going to use that money to finance your purchase of real estate, whether that is a mobile home, a condo, or a residential duplex, triplex, new construction, etc. All right, so they gave me the list of requirements in order for me to start a bank. I did not meet that list of requirements, so what I did was I went to work as a mortgage loan officer first, so that I could see the process of and learn more about how banks lend money. So another example of that is like if you want to start a restaurant, it's smart to go work for a restaurant first to see how they operate, then venture out and start your own restaurant instead of just jumping into it. So that's what I'm doing now. So the goal is to own a bank and to be a lender. That is my goal. That is my short-term goal. So when people say that renting is the same as owning a house, it's really not. And that's because you're looking at it from the point of view of a renter. I'm looking at it from the point of view of a bank. All right, so I'm gonna give you an example. First of all, if you come to me, the bank, I'm not a bank yet, but one day I will be. If you come to me and you see a house that you want to buy and you want me to lend you some money, well, now I have to, I'm going to have you fill out an application. I am going to want to see your pay stubs. I'm going to want to see your W-2s. I am going to want to see your bank statements, your savings statements, 401k. If you're just getting a divorce, I need to see your divorce decree. Do you get alimony? Do you get child support payments? I need to see all those documentations because I'm getting ready to lend you hundreds of thousands of dollars, and I want you to pay me back. I'm about to start a 30-year or maybe a 15-year friendship with you, and I want us to be friends for 30 years. I want you to pay me back. So I'm going to get all this documentation and I'm going to go through it with a fine-tooth comb. Okay, how long you been working at your job? You need to have been there at least 2 years. Wonderful if you've been there longer. I'm looking at, let me see, when you fill out your application, when you write down, hey, I make $400 a week, and I'm just making that number up. I make $400 a week. I'm going to say, okay, let me see the pay stub to back that up. All right, you gave me the pay stub, right? Now I'm gonna see, let me see your bank statements. Okay, so I'm looking for that $400 that you said you made, that from this statement that you just gave me. I need to see it in the bank. It can't be in a shoebox under your bed. You're asking me to give you hundreds of thousands of dollars. You gotta show me the money. I need to see that you have consistent employment and money coming in. I'm going to look at your bank statements. Okay, she said that she made $400 a week. She gave me the pay stub. I see $400 a week going into her checking account. All right, girl. All right. All right. You get any child support? All right. Log into the Georgia.gov, the child support website, and print out your statement. I need to see it. Prints it out. You get direct deposit, or they put it on a card. Direct deposit, cool. How much you getting per month? 400. Let's say she get $400 in child support per month. Let me see your statements. Okay, got that. Bank statements. You have to show me on your bank statement that $400 a month from child support is going into your checking or your savings account. I need to see it. How old is your child? 5 years old? Okay, so that means she finna be getting child support. I don't know what age does child support end? Is it 18? She got 15 more years. All right, of getting $400 a month. All right, that's good. All right, I got that. Okay, got that right. You got 401k? I need to see the bank statements. I need to see the bank statements. Okay, got that. So I need your purchase and sale agreement from the house that you plan on buying. All right, you want me to lend you $300,000. All right, you working with a FHA loan. Your loan officer thinks that an FHA loan might be perfect for you. Now I need to see your credits. What's your credit score? Your credit score is going to determine your interest rate. So let's just say your credit score is, we're going to say 700. And so that means that you're going to be putting 3.5% down. I'm looking at your checking account statement. I need to see that you already got that money in your checking account. It can't be in a safe in your basement. It cannot be in your pocket. It cannot be in a shoebox under the bed. I need to see in a bank statement from a bank that you have enough money to pay closing costs and make your down payment. So me, the bank, I'm going through a process to make sure that me and you are in a 30-year friendship. I want to be your friend for 30 years. So when I give you the money to buy the house, the last thing I want to do is have to foreclose. That is I don't get what you hear a lot of people say, girl, you don't own that house. You gonna miss your payment. They gonna come get your house. Trust me, boo-boo. The bank does not want to come get, they don't want your house. They do, the last thing a bank wants to do is foreclose on a house. It's gonna cost me more money. I want to continue my 30-year friendship with you, okay? I don't want to come get your house. It's going to cost me money to come get your house. And then I'm going to lose out on money. Let me give you another example. Let's say you don't call me. Let's say you lose your job. Or let's say you're an older lady and your husband passes away and you're not able to make the payments because he was the breadwinner. And let's say you don't call me and tell me, hey, my husband passed away. I don't know your situation. You just stopped making payments and you have avoided my call. Did you know by law, I am required to contact you? Baby, if you haven't made your mortgage payments, the bank, they're not calling you to go off on you. They're calling you to find a solution. We're just trying to find a. Did you know that you have solutions? Did you know that there are options? So you'll hear a lot of renters say, you late on your payment, they coming to get your house. It doesn't work like that. Did you know by law that me, the bank, by law, I am required by law to work with you? That's why I'm calling you. Answer the phone. I'm the bank. I'm calling you. I'm trying to work out a solution. Because I want to continue this friendship for 30 years. Me and you, if I give you some money, we're friends for 30 years. I'm calling you to work out a solution. I don't want that house. I do not want that house. I'm about to lose out on money during the foreclosure process. Banks don't make a profit off foreclosure. I don't want that. I don't want your house. Banks don't want your house if that's what y'all thinking. When they call you, they not calling you to go off on you. I'm calling you to tell you about your options. So here are your options, honey. What's your situation? Because I haven't heard from you. Well, then we might be able to look at a loan modification. Girl, how about I switch your due date? When you gonna have it, girl? Or boy, I'm not just girl, when are you gonna have it? I'm calling you to work stuff out, because last thing I want to do is foreclose. I'm gonna give you another quick example of that, just so, because some people probably can't. I'm thinking about it from a bank's point of view. You're thinking about it from a renter's point of view. Let's say you bought 2 cars and you can't make the payments on one of the cars, but you got a friend who needs a car, right? So you start renting out the car. You be like, hey, I ain't got but 2 more years on this car. You make the payments on it and you can have it. You know what I'm saying? I shouldn't have bought it anyway. I'm gonna let you get it though. So your friend takes the car, he's making the payments, right, for about 3 months. He moved off to California or something. He's making the payments. Then all of a sudden he stopped making payments. Okay. The reason that you got rid of the car was because you couldn't afford the payments. The last thing you want is for him that you don't want. You're gonna have to hire someone to go locate the car and repossess the car and bring it back to you. That's costing you money, right? The reason you gave the car to him was because you was kind of low on money. You couldn't afford that car. Now you got to go spend money to have it repossessed. They got to ship it all the way back from California. That's costing you money. Banks do not want your house. They want you to continue to make payments and stay in that friendship. So when they call, answer the phone. So when you hear those stories about people, they took such and such house, such and such wasn't answering the phone, such and such was avoiding phone calls. They weren't doing what they were supposed to do. Baby, if you can't make your mortgage payments, call me. Just call me and tell me, hey, I don't have it. What can we do? What are my options? Did you know by law, I am required to give you options. I can't just come take your house. So stop saying that. Another thing, if I'm a homeowner, every payment I make, I'm building up equity. I'll give you an example. I have a house. I've had that house for like 10 years. I have not taken any home equity loans out. So I got about $200,000 equity in that house that I don't plan on touching because I really don't need it. But I got $200,000 equity. But let's just say I needed that money. I could do a home equity line of credit. And now when you use a credit card, check the interest rate on your credit card. Pull out your statement, check the interest rate. The interest rate on your credit card is 27 point something. Some of them will go as high as in the 30s. Sweetie, if I got 200,000, if I need, let's say I need I'm trying to put a playground in the backyard. I got to use a credit card. Why would I use the credit card with 27% when I got $200,000 equity in my house? I can do a home equity line of credit and borrow at a lower interest rate. I can't quote rates as a bank. I don't do that. But I guarantee you it's going to be lower than 25%. When or who do you know has a home equity loan, line of credit, or who do you know that purchased a house with an interest rate higher than 25%? No one in our lifetime. No one. Not in our generation, not in your grandparents' generation. So what I'm saying is I can borrow against that money. I own a home, right? Let's say I can't make my payments. All I got to do is call my mortgage company. By law, they are required to work with me. They can't just say, oh, we don't want to hear that. I don't know if that's what y'all are thinking. They gonna tell you, we don't want to hear that. You better make these payments. No, 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 no. They can't do that. They are required by law to work with you. They are required to exhaust all resources to keep you in the house. They can't just put you out. So stop thinking that, honey. Stop thinking that. You didn't answer the phone when I was calling you. Yeah, so I went ahead and went through with the foreclosure process because you weren't answering your phone. All you had to do was pick up the phone and say, hey, I ain't got it. What's my options? Bam, bam, I would have ran down your options for you. Pick up the phone if you can't make your payments. They're calling to work it out with you. They are required by law to do it. As a matter of fact, if you are a homeowner and you can't make your payments and you call your bank and they tell you, oh, that ain't our problem, call me and I'm going to get on them. They probably know that you don't know the law. By law, banks are required to work with you to keep you in your house. And plus, that's why we have this thing called mortgage insurance. You pay insurance. You have unless you, and people with that renter mentality, they definitely not paying 20% down, which would eliminate mortgage insurance. So if you buy a house and you make a payment, if you have a down payment less than 20%, then you have mortgage insurance. You're paying insurance. So stop with the renting is the same. It's not, because you as a renter, you can't tap into that equity. You gotta use your credit card to go make a large purchase. And you're gonna be paying 27%. I can tap into my home equity and be paying a lot less than 20%. You as a renter, if you can't make your payments, yeah, you gonna get put out. Me as a homeowner, no. By law, they better work something out. And if they don't, then in worst case scenario, if you know you can't make your payment, why not list your house for sale and avoid foreclosure? You can avoid foreclosure by listing your house for sale before you get behind on your payments. Or you can rent your house out. Let's say your mortgage payment is $1,500. Rent your worst case scenario, rent your house out for $1,500. Or if it's in great condition, rent it out for $1,800 and make a profit. It's so many options that people don't know about. So I can tell your mentality when you say renting is the same as buying, it's definitely not.